update on the last few months. The first few slides are fairly similar. I'll go through those. I've got a few new interesting ideas to present to you, and then I'll go through the various asset classes and what's happening. But as Darryl has said previously, and as I've said, equities seem to be topping out very high at the moment, and all commodities are very low. So some kind of a shift may happen soon. Talk louder. So going back to June of last year, got a signal which is a reliable signal. It's now been accurate 21 times out of 21 over the last 130 years of the Dow. And it usually predicts some kind of a significant high or top in the market, and at least a 12% drop in the market for the Dow for sure. It'll tell you the top's coming in the next sort of few months to a year. So what I did, I built another tool which calculates windows of opportunity for where that top might actually happen. This is where we were last, I think, October. There's actually a window 5, and I'll come to that. I talked about this a little bit last month, and I'll talk about this in a few minutes' time. But on the end there, at the right, there's a window 5 which goes into Q1, Q2 of next year. But basically focusing on those 4 windows at the moment. We got to December last year, which is what Darryl said. It looked like a top. It looked like we were topping out in window 3. As it turned out, we weren't. But window 1 and window 2 we'd passed by, so they're crossed out. When we got to the beginning of the March month, at the meeting of we got together in March, the market had gone higher, so that means that window 3 was then out, and we were focused on window 4. But as Darryl said, we haven't gone much higher than the December top, only literally 100 or so points higher. From that March high, I calculated on the daily chart, this is the weekly chart, a couple of extra windows. I put those in blue, windows A and B, and they gave a little bit more vision into where the markets may top out. Specifically where window 4 and window B were overlapping looked like a good candidate, and some other analysis which I won't go into now also suggested somewhere around the end of Q2 this year was likely to be a top, certainly a significant high. So as the months rolled through in the spring and into the summer, we did top out in May on the Dow, and we came down. This is where we are in August, just moving the chart a little to the left to give it a little bit more space. Moving forward then, we went into October, we had the downturn in August and the bounce back up. So we had, on May 19th, we had both the Dow and the S&P 500 top out. A month later, we had the Nasdaq Composite and the Russell 2000 top out in June, same day, 23rd. And actually, the Nasdaq 100 topped out the month after that, the day before the July meeting, which was the 20th of July. So that box window 4 had ended up capturing each of the highs of all of those indexes in the US. What I'm going to show in a little while is that the Nasdaq 100 has gone a little higher. It's the only one to do that. All of the others, that was the high recently, and have not gone higher. But the Nasdaq 100 has gone very slightly higher. We had a 16% drop in the Dow, and as I said, the Pinnacle model I have always predicts a minimum of 12%. So the fact we got 16% means that criteria was fulfilled. And the delay between the signal and the actual top for the Dow was 48 weeks. The average over the last 20 signals was about 39 weeks, so it was in and around the average. And this is where we were in November. We just topped out at 18,000. The last time we were at 18,000 was actually November last year, and it took 5 months from November last year to May this year to actually get that slightly higher top. And it took a lot of buying and selling, a lot of volatility between 18,000 and 18,350. So the question is there enough upward momentum in the market now to take us from where we are higher still than the highs in May? The rally, as I said, last month was weak on the Dow, weak on the Nasdaq Composite, and actually had broken on the S&P 500. And I'm saying broken when looking at momentum, upward momentum on the charts, the daily chart I think it was, the S&P 500 had a downward move which had broken the upward momentum pattern. As it turned out, the Dow Jones and the composite, Nasdaq Composite, they had actually created strength. They actually did complete their pattern upwards. So we have this strange situation where some of the indexes are showing strength and the S&P 500 is not. It calls into question the rally. So that gives us a range now, range at the top 18,000, the range at the bottom into the August low, where we're going to go. I said last month that maybe we'll go a little lower, bounce back up, maybe have a Santa rally, and then down into end of Q1 next year, as a rough guess. So this is what's actually happened. We've actually bounced around the top of that box, and as of yesterday when we had the Fed announcement, we had a rally upwards, and then all of that's been lost today. Interestingly enough, if you remember the work that Steve Bigelow presented last year, today on the Dow was a bearish reversal, so the market went slightly higher than yesterday's close, and then down below yesterday's open. So the bears completely entranched, took out all of the positions of yesterday's bulls, and that seems to suggest the bears are in command at the moment. We'll see what happens over the next few days. There's only 8.5 trading days left of the year, so we'll see how it progresses. Today's downward movement might be the beginning of a bigger downward move, possibly before a final Santa rally, or possibly just a lower low into a lower down move into the beginning of next year. Just about that window 5. So I talked about window 5. Window 5 is March to May next year. Now, whether we'll get a higher high and therefore a new significant top in that window, or we'll get a lower high, so we're going to bounce up, but it won't quite surpass the highs we had in May. We'll find out, but that's potentially a point where we're going to get a higher high or a lower high. So somewhere in the late, sort of the early spring, late winter, early spring, we might get an upward move. Something I covered last month was a new model I developed for predicting future flash crashes in the US stock market. I showed you this chart, and the output of the model, which looks at weakness in the movement of price. It actually is a model that looks at strength, but by looking at the absence of strength, it shows weakness, if that makes sense. And we had a date came out of February, May 2010, which is when the original flash crash happened, August the year after that, another year later, May 2012. Both of those were not flash crashes, but significant waterfall movements downwards. And then we had August this year when we had another flash crash. The Dow dropped 1,000 points in just a few minutes. So both of those were flash crashes, and the others were significant move downwards in the market. So the model seems to come up with very important dates in the movement of price. What might be causing these flash crashes? Some factors are: one, QE programs were in play, and at each time QE had ended. In the case of May, it had ended recently. In the case of August, it had ended almost a year before, but certainly QE was in play and it had ended. We've got much more computerized trading going on now. The market was an upward trend and lower volume. So any one of these could be causing these, or a combination of these effects. It's difficult to know at the moment. We've only got 2 points, but certainly the model is kicking out these dates as significant downward movements in an upward trend. They're worth taking note. So what I've done then is said, well, what if I roll this model forward? What signals do I get into next year? Well, one is in Q1, that's a minor signal, so it may not be much of a downturn. One is in Q2, again minor. One in Q3 is major. So let's have a look at that very quickly for next year. We've got this chart, which is 2013, 14, 15, 16. That's the August drop we've just seen. And we've got January, May, and July with the dates I've just given you. Now the way the model works is these are the earliest possible dates that a downturn may happen, and they may shift to the right. They're also linked together, so if the January one moves to February, May automatically becomes June and July becomes August, so they shift together. For that reason, I've said, well, we've got a window of maybe 2 or 3 months, beginning of the quarter, beginning of the year, Q1, Q2, so it could be May or beyond, and again July. Could move into next year. It all depends on how the market moves between now and when it gets to those dates. If the market goes up, they'll shift to the right. If the market starts coming down, they'll stay where they are and signify weakness in price. Now, that suggests the market's going down next year, and I didn't really want to do that with this chart. So I've also done it that way. Potentially the market could go up, and as I said earlier, one of the factors is that the flash crashes happen in upward movement in the market, so it could be that I'm wrong about the top, the market moves upwards, but we still get weakness in price. We'll find out in the next few months. Looking very quickly at the NASDAQ Composite 100 and also at the Russell 2000 to try and get an idea of where the market's going. This is the NASDAQ Composite. We had that rally, which I said was probably coming to an end in spring. In spring I said it's probably coming to an end soon. We now have an all-time closing high and an all-time intraday high for the composite. We crashed down in August, but came back up again, but we didn't create a new high. The high for that was, as I said, in June, along with the Russell. Looking at the 100, that hasn't surpassed, that rally again was weak and coming to an end. We haven't surpassed the high in the year 2000 for the NASDAQ 100. But what has happened, we had the crash down in the summer, bounce back up, and we did go very slightly higher, which worries me a little bit because I wasn't expecting that, but perhaps it's because the stocks that make up the 100, more momentum oriented, have been pushed up in price, and that's given them a very slightly higher high in terms of price for the NASDAQ 100. Looking at close up, this is the NASDAQ 100 just over the last year. We had the top in July 20th, very close to the other highs in the indexes. Then we had a November 4th higher high and a December 2nd just recently. If we take a look at the July 20th high and then the December 2nd high, just basically 1%, 46 points higher, which means that the market has pushed a little higher for the 100, and that's something to be wary of. Maybe there is enough momentum to push the market higher at this stage. We'll find out in the coming weeks. Looking very quickly at the Russell 2000, this is a monthly chart over the last few years. There's a downward trend beginning. There's a phase 1 change over the high in June. There's a phase 2 down. We had 6 candlesticks. We need 3 more to make 9 on the monthly chart to indicate a strong downward momentum on the monthly chart. So if we had 7, 8, 9 like that, something like that, that would indicate, certainly for the smaller cap stocks, we got a downward trend, and that might be the beginning of a downward move into next year. But we still have to wait out and see until between now and the end of Q1 whether we actually get that pattern to complete or not. If the market comes back up again and that pattern is broken, then the analysis is invalid, but it's something to be aware of on the monthly chart.
Suppose the first month is way down.
It actually, going back, if the first month is way down and the market comes back up, as long as candlestick 8 is below candlestick 4 close and candlestick 9 is below candlestick 5 close, the pattern still is complete. It's all about a candlestick closing above, or no, in this case below, candlestick 4 before. So we could have that pattern. I've just given 3 down moves, but it could be a down move and 2 up, it could be a down and up and a down. But we'll find out over the next few months whether that pattern completes. But that could be the first of the major indexes going downwards on a monthly chart, which is a significant move down because it's such a large scale chart. Looking at treasury notes very quickly, we were down at the beginning of the year. We bounced right up into the middle of the year and we've come down somewhat. I suggested that there could be a low in the beginning of Q1. The market's come down. That rally across the whole of the year, very much like I've talked about with oil over the summer, it's weak. It's moving at a slow trend upwards, but there's not a lot of strength for that. There's not a lot of solid momentum to that upward move. So that could still come down as we move into next year. And it would possibly be a cross purposes sort of the Fed's just done. There we are in December. And that's just shifting the charts. We've got more space through until October next year. Currencies. Just looking at, this is a long range view of the dollar, just looking at the last 3 years, we've seen a very prolific rise upwards. This is where we were in March, and I said potentially with this rally it looked like it has come to a point where it might take a breather, we might come down and back up. What's actually happened is we came down, rather than go straight back up, we moved sideways, and then we have actually moved back up again. We formed a new high at that point, or a double top if you compare it to the previous top. Now, do we go higher from here or not? I'm not sure. If money flows into the US as a result of a crisis in the markets, then maybe it'll go higher. Looking at the euro, as we said for quite a few months now, mirror image of the dollar, looking at this long range view from 2006 to 2014, looking at the last few years, we see an exact mirror image of the dollar. We come down. I said that particular that downward move would probably come to an end, would take a breather, come back up and bounce down again. And that's really what has happened. The markets come up, the prices come up, come down, It actually went sideways for a while and then it's come down. It hasn't created a new low, it's just stopped above. It didn't actually reach parity. A number of commentators said that perhaps we would reach parity on the euro. We haven't got there yet. Individual stocks. Last month I introduced Boeing, Home Depot, Amex, United Healthcare and Visa. Next month I haven't got to them yet. Disney and 3D Systems Corp. I'm going to add. Looking at Apple, huge bubble formation with a top in 2012 and then another top recently at the beginning of this year. I'd written a publication which suggested we were very close to a top in Apple, and the model I had suggested we were very close to the top of the bubble, and we were in a bubble situation with Apple. The market did go very slightly higher than that top over a number of weeks. In the publication I said somewhere between the end of 2014 and about the middle of February we'd reach a top. That's the particular chart from the publication, and 5 days later, about 1 week later, we did actually reach a high at that point. Since then, moving sideways to May, we get another high, very slightly higher, and since then, we've come down into a low, a 32% drop in Apple. And we have come up since then to the December point, but giving us a little bit more space through to October next year. We have that point there is the point where the bubble has to burst to for that bubble to completely deflate. So since we didn't get down to there with the August low, potentially we're going to have to come back down and go through that line. And I'll show this line for each of the stocks that we're going through. So potentially we're going to come down again on Apple and come down through that line, and potentially lower. I don't know how much lower at this stage, but that's the point where the price has to come down to. This is Boeing. Similar sort of situation. We had a top earlier in the year, 27% drop. We've gone higher, bounced up. But again, that low there, similar to the low we had in August. Potentially that's it, but it may come down and go lower than that point. Home Depot, that was going up, and I suggested that even though we had a very serious drop in August and come back up again, that the top was probably going to happen later in the year. We had a 25% drop, so sure enough, Home Depot's gone higher and higher again. And again, it's at a point which the price has got to come down and below before the bubble is fully deflated. American Express had a high last year, it's come down significantly, and there we are into December. It's actually gone down through the line that I would expect it to go through. So that bubble has deflated. And potentially at some point will reach a low and come back up again. You know, in healthcare, similar situation, that's actually got much lower to go. So that point where the bubble is fully deflated is a lot lower than the low in August. And then Visa, similar to Home Depot, a high or a top later this year, maybe early next year, and a significant way to come down to deflate that bubble. Disney, I've got the charts here, but I haven't done the analysis yet, so I've got question marks. I'm not sure where the top box would be for this. It could be we've actually hit that already, or if we've got a rebound at the moment, which may go a little higher. That's where we are now, December. The low that it's got to come down to is 90, at least. I've done that analysis. The other chart I want to show you is 3D Systems Corp. The reason why this is interesting to me is that it's a huge bubble formation, and what I want to do is I want to run the model. I haven't done it yet. I want to run the model on this to see if I get the right output from the model to identify the model when it's building and also show the top. So I haven't done that, but I'll hopefully have that for January's meeting. Looking through the usual asset classes. Japan, we thought it had a high top in November. The market went higher, so that meant window 1 and window 2 were not the top of the market. But we had something out in Q1 of 2016, which I called window 3. The market continued higher. In the summer, I identified a potential window July to August. On the chart there. The market has moved up in Japan to that point. And that then ended up being July till September as window 3. Sure enough, the market went up into that window, came back down again, crashed in the summer, came back up in the winter, in the autumn. And this is where we are in December. Whether we'll make it up into window 4 or not, I'm not sure. We may have a higher high or a lower high, just as we have for window 5 on the Dow Jones. China, we had 2 windows of opportunity, end of last year, beginning of this year. Looks like we might have topped out there, but actually the Chinese market went higher and actually went into a bubble mode. The possibility of a top in Q4 of this year, where they registered in April, identified that the Chinese market reached a bubble and was going to go higher. At this point, it went another few weeks higher. I identified a window of opportunity from the beginning of Q3 to end of Q4. What actually happened is, as the market in China got to mid-June, it actually crashed and then came down again very suddenly. What I showed you last month was, as the markets come back up, that's actually the line that the price has got to go down to, I believe, for the bubble to completely deflate, and it must completely deflate. If it keeps trying to go up with efforts from the government, it still has to come down to that point before the bubble is fully deflated. So there's another 1,200 points as of last month before. It has come down a little bit since then, up to the December point. Just moving the chart there. So this is what we're looking at. So into next year, potentially we'll see a drop. There's a formation on the Chinese charts, which could end in the next 2 weeks. So the rally we've had up over the last few months looks like it's coming to an end. And once that's finished, we may see a drop down into next year, and then a move down to the horizontal line. India, that moves up and down, and it looks like I'd actually got window 3 incorrect at that point. That was the correct point for window 3, so the top was the first quarter of this year. There's another window 4 at the beginning of next year, and I think that's probably going to be a lower high rather than a new high. So this is where the market was in August, then October, November, and then December. So it's come down since the high in Q1 of this year. Germany, similar to India, the windows were slightly wrong. Come down significantly since then, that's December. France, same again, we reached a high in the first half of this year, and come down significantly since then. And the UK as well, reached a high in the first half of this year, and has come down very significantly since then. I actually added the window 3 and window 4 in green for the Dow Jones, because I do notice that the movement of the mathematics behind the UK FTSE index is very, very similar to the Dow. So if I put window 3 and window 4 for the Dow on, they actually overlap very closely with window 1 and window 2 for the FTSE. Argentina is a bubble that's been growing in South America along with Venezuela. I'll show Venezuela in a moment. So the huge bubble. Looked like there might have been a top in September. The market came down very seriously, but the market hadn't fully deflated. It's come way back up again. Haven't quite reached a new top, but over the summer it's been pushing back up, and then has recently gone higher than the high in September last year. There's a window of opportunity end of this year into Q1 next year, and the market's then come down since then. Whether it's going to have one more push up into that window, or it's just like China's just dropped before that window started, that might be the top. Venezuela, an even bigger bubble than Argentina. Really crazy growth, but they've had big issues in Venezuela, certainly with the price of oil coming down, and currency issues as well. We had 2 windows of opportunity, window 1 and window 2, one last year, one early this year, and then potentially window 3, Q4 of this year. The market has come up. I noticed in the summer there was potential, even after this very large growth, there was potential for a window in August, and I noticed like in June, the market then went up into that box in August, came back down again, and then it's gone back up since then. Whether it's going to actually create a new high, it doesn't look like it at the moment, but it's either going to be a higher high or a lower high in window 4 for Venezuela. Oil, they were at the beginning of the year. Oil had come down, hit a low in window 2 beginning of this year, bounced back up, That particular rally there, window 4 I actually extended by 1 month into September. And the rally had come up. I won't show the evidence now, but the rally looked weak, and I suggested that it probably wouldn't continue, would come down. So sure enough, it did. Crashed down into window 4 in August. It's come up since then. It's now gone lower again. Now I've got a large window at the moment, 6 months window out into Q2 and Q3 of next year, called window 5. So at the moment it's looking like we might have one final push down in the middle of next year for the price of oil. We'll come lower. We're testing the low in 2009, which at WTI was $33.55. So we've come down close to that in the last few days. And what I'm suggesting is that we might have a year-end bounce because the move down looks a little weary, and it might bounce up into the spring and then come down again into the summer. So I'm suggesting we might get a low point building over there between now and the end, between the beginning of December and the end of January. That's window 5 there.
Do you have a price projection this month?
At the moment, I've got 32, between 32 and 37. Clearly, we've gone through 37 now. We're down to 35. But yeah, 32.
34, 34.
That's right. So the model I've got, the projected price has got a low of 32 at the moment. Nothing yet, but it kicks out new prices as it goes along. So 32 is the lowest at the moment.
Well, that was the low. It was actually a little 32 change from 2000.
Oh, okay. Rather than
yeah, some people have it at 33. It's like
right. Okay.
So that's the support.
Yeah. So he's either going to go down to that, match it, and come back up.
It's definitely.
Yeah. The question is whether it crashes through it.
Excuse me?
How will we know? How will we know when it's going to crash?
I will keep running the model, and if that Windows 6 fragments, it might fragment into smaller boxes, and I might get a lower price projection as we get more action into the model, because the model requires more price movement to then know what's going to happen. It looks at patterns of candlesticks, and certain patterns usually indicate a movement upwards and a move downwards.
When do you think oil is going to go back up to where it originally was?
Well, at the moment, I'm suggesting that we've got a period of 6 months next year, Q2 and Q3, where we might see a final low. I haven't seen anything beyond that. It doesn't mean that we don't get a low beyond that, but I think in between now and the middle of next year, we might see the low.
You're going back up to the 2014 range?
Say again?
When do you think it will go back up to the 2014 range?
Oh, will it go the price range? That I don't know yet, because until the market starts going up, I can start to identify the bottom, and then when the market starts going up, I can get price projections above where it is, but it won't necessarily project at the very top. So that will only come over time.
I have a question. You say oil is going to be on a downward trend. I'm not saying you're optimistic, but you've seen sometimes stocks. You seem to right now call it cheap. How can oil go down and stocks not go down as well? So that low.
Well, if stocks go down and we have a recession, people get laid off.
Yeah.
Industrial use of oil will go down, it won't go up.
I know.
Yeah, so supply we know around the world is going up. If demand goes down, then you're going to have an even bigger price pressure downwards.
But you anticipate it going down, so you anticipate down market across the board.
Certainly oil into the middle of next year, but I'm also suggesting that we have a possibility of the equities going down for 2 years. So oil may bounce middle of next year and come up, and equities may go down.
Over 2 years, you know.
Say again?
So you're using the 2 year longer time.
There's this particular pattern that's starting to build on equities that could go down through to late 2017. It's not proven yet, because we're going to see through this year into next year whether that happens, but it's a possible pattern that may build. And the pattern is only seen once before in the last 130 years through the Great Depression. I'm not saying we're going to have a crash like the Depression, but the mathematics of what happened in the Great Depression has only happened again once more, and that's where we are now. And to unwind that overbought situation, it has to go down for a certain number of months.
In what? In what? Stock market though?
Stock market, yeah.
You said that once you get your signal,
Yeah.
on average, it takes about 39 weeks, did you say?
For the top to form. So the top form 48 weeks after the signal. On average, it's 39 weeks. So sometimes less, sometimes more. So what I'm saying about the top that happened in May was 48 weeks after the signal, which is around about 39 weeks. It's not too far off. And it could be as little as a couple of months.
Last May.
The May that's just gone, yeah.
Yeah, right. So So it could
But the bottom, I projected using a different tool. That could be a year or two. And if I'm right, we're already 6 months into a downward move anyway, because we're 6 months beyond May.
Right, so you're expecting it to continue to decline?
I think we're going to decline into next year. Certainly what's building on the Russell, the smaller caps, and the fact that we haven't gone any higher at the moment. Unless we push higher in the next month or two into spring, then the tops in May are going to hold, May and June, and this rally at the moment is going to fail and go down from that. And this lower high will be a signal that there's not enough momentum upwards, and then people will start to worry.
So are you still anticipating a New Year Christmas rally?
Not necessarily. No, I wrote a few days ago that if we get one, it could be a tepid one or none at all, and in which case that will really concern people.
The Santa Claus rally is only considered like a 1.4% or something. It's not a major thing.
No, but if the selling pressure is strong enough and it cancels out, that's a signal that something's not right. Because normally we get 2007 when the top was in October, wasn't much of a rally that year. And the market continued to go up and down, but in a downward move all the way through into 2008. So gold. That's continued to go lower. We had an initial window one late last year. It looked like that low was in, but then another low in March. And I had a Q3, Q4 window of opportunity 2015 this year. Gold's gone lower all the way through. This is where we're in August. Climbed a little higher and then came lower again, and lower still to where we are now. So gold has come down consistently over the year. Silver, very similar. I was just moving the chart a little to the left. Silver's very similar. We had a window opportunity November last year. We come down through the year. There's May, here we are in June, October, November, and then here we are in December. I've actually given it a dotted box. I put that box in there because silver trades very closely to gold. The model for silver doesn't actually show that box, but I've taken the one from gold and put it there because they are so similar in terms of where they top and bottom. Natural gas, huge decline in price. And this is a multi-year view, 2007, 2015. Looking just at those last few years, this is what it's more like close up. We had a low in 2012 to come up and then bounce down. And we've actually challenged that low and gone lower. Just looking at the last few years then, we had a move down into early this year. And I had at the time a window one opportunity early this year, and then a window two opportunity Q1 of next year. Seemed like a long way off when I put this in beginning of this year, but let's see what happens as we move towards it. That window two, it actually grew a little bit, included Q4 of this year, and sure enough the price has come down into that window of opportunity at the end of the year. Copper, again long-term view, got a general downward decline in copper. Just looking at the last few years, we had a low 2015, and a rally up in the first 2 quarters of the year, but that didn't last. We've come way down and continue to go down. I've got a window of opportunity the last 2 months of this year, first 3 months of next year, and we've come down into that window. Coffee, long-term view, 2008, 2015, just looking at the last few years. We had a low at the beginning of this year, winter and spring, and a general decline down into window 3, which, just go back, was Q1 next year, but actually increased it to include December this year. We'll come down into that box. Whether we'll see a further decline, I don't know. We'll see over the next couple of weeks. So all of these commodities coming down in price. The only one that I've added is uranium. I showed some specific analysis last month. I won't go into that this month. But just looking at the long-term view, looking at the last few years, we have a very volatile price, but a consistent low point of 4.7 on this particular fund. We've gone a little higher into December, but at some point we might see one more dip down. If you're interested in something like uranium, that might be a time to buy uranium. A couple of things, I looked at platinum and palladium. I couldn't get any good data on it, so I may not continue with those. I've got some currencies I may look at next year. And as I said, next month I'll look at 3D Systems, Disney, and then a number of others that I think are in bubble formation, and see how they're progressing. But my overview is that with all these stocks in a bubble formation, bubbles have to burst. They can't keep going up. And if so many stocks within the US market are in a bubble formation, I can't see it going much higher. So the evidence in terms of the Russell potentially coming down, the bubbles in various equity stocks, potentially a top in for all the key indexes. I'm thinking that next year the equity market will go down, and the next couple of months, next few weeks of this year, last few weeks of this year, first few weeks next year, we'll start to see whether that's true or not. Well, thank you very much for listening. That's the end. Any questions?